Welcome back. Today we're diving into Amazon's latest earnings report. Brace yourselves because it's quite the ride. The retail behemoth reported first quarter earnings that left Wall Street analysts with their jaws on the floor. Both top and bottom lines were well above estimates, causing Amazon's shares to surge a cool 5% in after-hours trading. Amazon witnessed a 13% climb in net sales compared to the same period last year. We're talking about a whopping $143.3 billion. This has left analyst expectations in the dust. A big chunk of this growth comes from an unexpected hero, Amazon Web Services, or AWS as we know it. AWS recorded a 16% jump in revenue. Yes, you heard it right, 16%. At this rate, AWS is on a fast track to hit the $100 billion mark annually. But Amazon's strength in cloud computing isn't just about providing storage and processing power. It's also fueled by the booming demand for artificial intelligence technologies. With AI applications feasting on massive amounts of data and computational resources, AWS is perfectly poised to cater to these needs. This gives Amazon a leg up in the AI market, sharpening its competitive edge. During the earnings call, Amazon's CFO, Brian Olsavsky, put a spotlight on the company's increased capital expenditures. A significant part of this expenditure has been invested in infrastructure to support AWS's skyrocketing growth. Olsavsky also noted the strong demand for AWS services. Customers are signing up for longer deals. Many of these deals come with a cherry on top, generative AI components. But it's not just AWS bringing home the bacon. Advertising was another key player in Amazon's revenue growth, pulling in $11.8 billion, an increase of 24% from the previous year. However, all that glitters is not gold. Despite the impressive performance, Amazon's forecast for the second quarter suggests a potential slowdown in consumer spending. Olsavsky pointed out that customers in the US are becoming more cautious with their spending, hunting for deals and trading down. Amazon's remarkable growth in the first quarter was largely driven by its cloud computing segment, AWS. Amazon's dominance in cloud computing isn't just about providing storage and processing power. It's a strategic play to leverage the escalating demand for artificial intelligence technologies. As AI applications require extensive data and computational resources, Amazon Web Services, or AWS, is primed to cater to these needs. This gives Amazon a distinct competitive edge in the bustling AI market. During the earnings call, Amazon's chief financial officer, Brian Olsavsky, underscored the company's amplified capital expenditures. This particularly includes infrastructure investments to bolster AWS growth. He also spotlighted the robust demand for AWS services, which is reflected in the trend of customers opting for longer-term deals. Interestingly, many of these agreements encompass generative AI components, underlining the growing influence of AI in the cloud computing landscape. With customers signing up for longer deals, many of which include generative AI components, AWS is well positioned to meet these needs. In addition to AWS, advertising was another significant contributor to Amazon's revenue growth. The advertising platform of the retail giant has shown a steady upswing, raking in a whopping $11.8 billion. That's a 24% increase from the previous year. It's clear that Amazon's reach extends beyond retail and cloud computing, making strides in the advertising world as well. As we look to the future, however, there are clouds on the horizon. Despite the impressive performance, Amazon's outlook for the second quarter suggests a potential pullback in consumer spending. The company's CFO, Brian Olsavsky, has noted a cautious trend among U.S. customers. It seems they are seeking deals more actively and trading down where they can. This could potentially impact Amazon's revenue growth in the coming months. Despite the impressive performance, Amazon's outlook for the second quarter suggests a potential pullback in consumer spending. Amazon's earnings report comes on the heels of strong performances from its big tech rivals, Microsoft and Alphabet. It's not a walk in the park for Amazon, as both Microsoft and Alphabet are also making significant strides in the same sectors. Microsoft's Azure and Alphabet's Google Cloud are formidable competitors in the cloud computing arena, and they're also investing heavily in AI technologies. In this high-stakes game of technological advancement, it's not just about who makes the most money, but who can drive innovation the fastest and most effectively. As these tech giants battle for dominance, they're pushing the boundaries of what's possible in cloud computing and AI. The result? A constant stream of new technologies, services, and possibilities for businesses and consumers alike. With each company vying for dominance in these critical areas, the competition is heating up, driving innovation and investment. This means we can expect a lot more from these tech titans in the coming years.